Hey guys, this is Sarah Cooley with NOLA Lending. I'm here with Allison again. We're doing our final video on mortgages and credit together. And this time we're going to talk about credit, and I'm going to ask Allison some frequently asked questions on credit and things that come up on my end that people ask me. But I try to stay away from giving too much credit advice because I don't know what's right or wrong. So hopefully this will help you, because we've got a lot of comments and messages that, Allison and I are, covering some topics that people are interested in and may not know. So let's get started. So whenever someone comes to me and puts in an application, the first thing that I do is obviously run their credit. That's kind of the biggest thing that's either a deal breaker just from the beginning. And a lot of things that I see are, for instance, debt to income ratio. So I kind of wanted to talk about that and see, based with, credit and debt to income, like what are things that you would suggest to someone that could help their credit, but also reduce their debt? And how does that play a role together?
I think that one of the first things is, knowing where you stand with your balances. A lot of times people kind of get overwhelmed with when I tell them, hey, you can improve your credit by paying your debt off, or not off, but down. But just start where you can, just small goals. I always tell clients, kind of like what I was talking about in another video of, look at all your balances. If you have for instance, a $400 or $500, if you have a $400 limit on a credit card and we know it's maxed out, it's at $350 or $399. The first goal is always get your balance under 50% of what that limit is, because if you're over 50%, you're hurting your credit score. If you're under, you're helping. And then the next goal, tangible goal, right? I try to give it little bite-sized, goals for clients is anywhere honestly between 1 and 20%, 1 and 19% is the sweet spot to keep your credit card balances when it comes to the balance to limit ratio. I go more aggressive than that. I actually tell clients to leave $5 on their credit cards at all times, because what happens is a lot of times when clients pay off credit cards completely, you'll see a natural increase in the credit score from that initial payoff. But people don't realize that the creditors have to pay to report to the bureaus. So if you have a zeroed out balance on your credit card long enough, they won't report it. You can look at the payment history on your credit report, and on that account, it'll show okay or paid or whatever or on time, but you're not going to see your credit score fluctuate. It's because your credit report, it's not a balance sheet of what you owe. I say this 1,000 times a day. It's the history of how you pay back your debt without having them reporting a balance or activity, right? That history of how you're paying it back. You're not going to have an increase in your credit score. So I always tell clients, keep $5. My husband and I do this. We keep all of our credit cards in a safe. I don't keep them in my purse so that I don't accidentally use them. I go intentionally use them for a tank of gas. If I spend $30 in gas, or these days it's more like 50, I'll pay, I just did this weekend, I paid $50 in gas. And I went ahead and paid $45 of it, and I'm going to leave that for the rest of the month. So that's the best way to do kind of gauge your balances, is just keep them active, keep them activated by just small purchases. And then types of credit is a big factor too. So you want to have at least one installment account and 2 revolving accounts. And a lot of times people have never heard of that term. What's a revolving account? It's a credit card. That's all it is. Because the balance, if you think about with an installment, it starts here, and then you have an interest rate, you're paying it down and then eventually paying it off. But a revolving credit card is going up. The balance revolves. You can one month you'll have a smaller balance, and then the next month you can have a major balance. Those revolving credit cards factor in your credit score a lot heavier than just an installment. But you want to have a healthy mix of credit accounts. So at least one installment. Sometimes 2 to 3 credit cards are a big kind of the way to build a healthy credit profile. And then the only other thing I was going to say on credit cards, because a lot of times I'll see a bunch of retail cards, and you and I know, being women that have shopped, you always get that offer at the counter when you're purchasing whatever you are at a store. They're like, oh, would you like to save 10% or 20% today and open a credit card? Why do you think it's so easy to get those? Because they give them to everybody. So those types of credit cards are easy to get, but they're not always the best route to take when it comes to building credit, because they just don't weigh as heavy in a credit score like a bank card would. So mix of style or mix of credit accounts, and then just making sure you've got low balances and then strong bank cards to help build your score.
And then if people do have like multiple credit cards that they're not using, or even like the retail cards that they're not using, you suggest leaving them open anyway, correct? Once
Yeah.
they're open, leave them open. Okay.
Yeah, because it's a lot of times I'll have clients say, hey, I never use that credit card. I never shop there. I just want to close it. Well, what if you opened that card when you were 18 and now you're in your early 30s and you're trying to get another house or whatever the case, and you close that credit card? Your credit score is made up of so many different factors, and one of them is length of credit history. And sometimes people, I had it happen to a client that I couldn't enroll in the program. Her score dropped because she closed one of her oldest credit cards that she doesn't use anymore. And so her length of credit history went from 20 years to like 10 or something like that. And so her score dropped. So it sounds way complicated, and it's really not. You just got to be careful. And so I always tell clients it's better just not to close a credit card. Just keep it open and keep it active.
Gotcha. Another question that I often get to is if a client has collections and they don't know what to do, or they ask me like what they can do. I try to give them the best information, but obviously I don't know what happens on the other end of that. So what would you suggest if a client has collections, whether they have a balance? And then also, what if they have a collection that doesn't have a balance, that maybe they paid, but it's still showing on their credit report?
Yeah, that's a great question. I get that all the time. In fact, when some of my my initial call questions to a client is, do you have, what kind of items are on your credit? And oftentimes they'll say collections. And the first thing I ask is, okay, have you already made arrangements to pay them? Because again, back to the way that your credit works is there's no logic in the credit bureau system. There's really not, right? Like you can have a collection hit your credit, and you would think, okay, if I pay that debt that I owe, it's going to come off my credit report. It actually doesn't. I get a lot of very frustrated clients that'll go in and pay every single collection that they have. And then, since there's not a credit course out there that teaches us how the system works, people don't realize that at the bureau level, like the collection company will report to the bureaus that this account's been satisfied. But what happens is they go in at the bureau level and they update the status as paid. They zero it out, which is fine, right? Your score's going to go up because the debt went down. But this other factor of that date of last activity updates, and now it's a brand new paid collection on your credit. So you could have had a collection from 2018 that you paid with good intentions, but now it looks like a paid off collection in 2021, and now your score's dropped. So it's the best kind of route that I would say to anyone that discovers they've got collections is look at how recent they are. The more recent ones, I feel like you have more leverage to do what's called a pay for delete, which is exactly like what it sounds like. I'm not going to pay this off until you agree to delete it, or in exchange for the payment, you're going to delete it off the bureaus. Typically, medical collections are one of the easier ones that will comply with that, and they're happy to do that. It seems like most other types of collections are kind of harder. They'll say tricky words like, oh yeah, we'll report to the bureaus. Yeah, we'll report it. We don't want it reported. We want it deleted. So I tell clients, I coach a client, I'm like, hey, you know what? That's a collection that would be worth paying off and doing a deletion. I'll have them contact that collection company before they pay it, call me back and kind of let me know the verbiage that they're using so that we have the best outcome. So sometimes it's worth paying. You just got to be careful how you do it.
Yeah, no, that's good. And then one of the last things that I get a lot of questions about is, and it kind of plays into debt to income. So like if a client has we're looking at their debt to income, seeing what we can do. And a lot of times it has to do with student loans. A lot of people have student loans, and sometimes they just don't know what's the best route to deal with them. And then every loan program requires us to factor in different percentages. So if I have a client that has student loans, what would you suggest that they do, or who can they talk to that could help them figure out the best route to deal with those?
Yeah. So we definitely recognize that, student loan debt is America's next biggest problem. Everyone has them. And now we're finding they're affecting people being able to get a house because, like you said, the debt to income ratio is way off based on the percentage. So we actually have at Rising Point, we have a student loan department that we send all of our clients to. And what they do for us is when I'm going over the credit report, I always tell clients, hey, I'm going to get you in touch with our student loan department. They can look at this and they kind of can help structure this for you to get a mortgage. I know just enough to be dangerous and get them over there. Basically what they do over there is they find loan programs, consolidation programs that may not even be public. Like, for instance, most of the time the government wants you to know about this many consolidation loan programs, but there's actually this many. So what they do, they look at that and see all the options that you have. Usually they are income-based repayment type of consolidation loans. And so you get all of your student loans, instead of being multiple line items that are throwing off your debt to income ratio, they get them consolidated to one loan, a fully amortized payment, and a mortgage verification letter, so that it's you're able to move forward on the loan side. So
gotcha. Yeah, and that's been super helpful because I've utilized that with clients, and it has been very, very, very helpful in helping them be able to purchase. So definitely, if anyone is watching this and has student loans that they're trying to get a handle on, or maybe just don't know where to start, reach out to me or Allison, because we can definitely get you in the right direction as far as getting the student loans taken care of. Those are all the main things that I have on credit that I get asked. So, and do you have anything else that maybe you want to throw in there?
No, I mean, I think every video covered all the major stuff. So
yeah. So just to recap, building credit, make sure you have the right lines of credit. Collections, always talk to, your lender, get in touch with your credit repair person so they can tell you exactly how to do that. Student loans, definitely want to get someone who's going to get you in the right program, and also someone who's knowledgeable about mortgages. So one thing that Allison and her team are great at is that they know the guidelines, they know where you need to be for these programs. So if you have any questions, reach out to us and let us know. And we'll try to link some information to, our websites and stuff, so you can kind of hop on there and look at some things. So that's it. Thank you, guys.
Awesome. All right. Thanks, guys.